Hello and welcome. Today's date, Tuesday, 17th of September, 2019. My name is Derek. All bets trades of the like within each his own risk and their own reward. It's all about statement. It's all about Fibonacci. Statement that it's going to reach the next Fibonacci target. And the statement has been occurring with all of this stuff happening among there. As I've been showing Fibonacci levels for the last little while, and the statement after breaking this level of resistance here at around 17 high change 18, which it clearly has done at this point, is that it's saying, okay, yeah, the market, I'm gonna have a concise move and do my Fibonacci thing at 1823, and the things, and it's plural. There's a lot of things that it does for hitting resistance and pulling back. Those are one of the things that it does. Other things in which it does is it doesn't resist it at all. And in those occurrences, well, I look for support at that level instead of resistance slash congestion, which is both above and below that line and chopping around there. Or in situations where it doesn't need to resist there, a clear, concise, and usually very concise and very fast move to next level thereafter that. $18.76 would be that number. Amongst the 1/3 day chart, we have price action still in the declining 18, but the 18 average of lows it's now flat. 18 average of highs, it's pretty much that too. Bands flattened out after coming down to the 1740 and then lifting off amongst that level. So again, we're going to take a look at this on the short term. This is the resistance range. And given, this is what's going to be interesting because I'm going to switch this to SLV, which we're not going to see this resistance high because this happened at 2100 hours. And I haven't looked at SLV yet either, but I just want to look at the short term and I know it ain't going to look good on this market. 11 o'clock, it'll see this one. Let's put the SLV up. And it really looks so much different to me. I do see how it's nice breaking out nicely above this, but anyway, as this one goes, this one doesn't even look that great either, but we can see from at 950 on. I mean, there are so many crypto markets on the 4 minute time frame that trade better than that. The gold to silver ratio using gold divided by silver shows that silver right now is overperforming that of gold right now. And if we take a look at it via this ratio, that the normal gold to silver ratio, because the reason why I'm showing it this way is there literally should be an exchange, albeit it would be probably opposite because gold would be more of a base market in the plateau. It'd be 0.12 and whatever decimals would follow there after that, or in that 11 and what after. Because GLD should be trading against a whole bunch of other markets, and especially gold to silver. I mean, how it's not traded together so easily, I'm sure maybe it is, but I'm surprised that it doesn't sound like it's easily done. But with the ratio in at 83.3 on the short term 4 minute term time frame, from today's high, it has fell from 84.5 down 1.1 or between 10 and 20%. Amongst the single hour chart, we're looking at an interesting scenario here. As where we are right now, price action here got above this for a huge monster move, or a big move anyway, compared to the volatility that it had. As we had this low, this high, and the consolidation that occurred thereafter. And then as it was breaking out, here to here. That's just a big move. And then it's correctionary phase. Okay, so it does it fast and it has a significant higher low. Amongst it, this has been a long correctionary phase. It even upgraded or whatever. It spent more time at the lower end in here. And obviously, we have seen just right now how it has broken down below that. That's clear enough to say that's a clear level of resistance break. Usually, you would expect that it's going to go further than that, but one way of getting there could be this way, congesting and then going lower, or just it could continue to go in the trend that it's going, which is a decent rate descent downward trend. But for now, what I want to see is, well, let me just take a look at other time frames. This is a single hour. We're talking about 85 high and low, barely below 82. So let's take a look at this, say, next at the 8 hour. And is this a failed breakout? Or is this a situation where you establish a key high, correct within the 18, new leg higher, back to the 18, new leg higher? It's going to be either or. Oftentimes, from failed moves in one direction, there's going to be fast moves in the opposite. But as it stands now, I'm going to continue on expanding the time frames and on the daily chart. We're looking at these consecutive down days, then the high, new low, and we're looking at this high, which happens to coincide with that low. And now it's entering into the 18. Is this a case of resisting the 18? And if we don't support in here and see weakness in here, and especially if it does it fast, and fast would be like really by Thursday, but any time this week, and definitely today and into tomorrow, that you have to consider. Okay, well, we're making a pattern here now since this thing's been going up. Of well, I guess we can now pluralize it of lower highs and lower lows, but to be in the aggressive form, coming from point A low to point B high, it was stair stepping move. There was this trend, and then it continued stair stepping to a different rate of ascent. So we had one way of stair stepping here, another one at a different rate. Then you had this little completion move in here, and that was just that completion. So here, huge move down, consolidation, huge move down, and well, are we exiting that next thing? That of consolidation? Question mark. Well, that's exactly what I'd be saying. Oh yeah, looks like yes when I do, and if I see weakness at the 18 lows. And anytime you're making pattern of lower highs and lower lows, well, you have to at least get above your last previous high to consider the fact that the trend might be reversing. For on the weekly, one, two, three. We go four. We'll go five. And just because I can, I'm going to go breakout here. Just because it was a big move from here to this top. And as far as tops are concerned, this high, we got this high, this high, this high, this high, and that high. It made a lot of higher lows and higher highs. And now this is filling some of this empty space in here of from here, or retracement, another way of putting it, from key low to key high. So if we talk about retracement, well, easy way of doing that is high divided by low to the exponent of the Fibonacci, multiply the low. So let's do that. And the first one is a 23.6% down move, but I calculate that 0.764 on the exponent because 76.4% up is the same as 23.6% down, which is what it's doing. And well, let's go back and see this on a shorter term again. And well, it's only luck that it would come down, and the 8 days straight was pretty much at this line. And then it went the next time it goes there, a concise break, and then it comes up and it resists this line pretty much. That, and then it's whatever. But when we look at this further again from this level, the next level going down to 23.6% is that of 38.2. and that comes in at 80.9. And it appears below it. And, well, it is as it is. If we look at this, say, again on shorter term, it really didn't spend much time there at all, but it's most certainly an area it came down to. It stopped going at this point, and uh, definitely extra volatility. And I like seeing that for the sense that, I mean, it would have been nicer, I think, if this would have, instead of topping it at a perfect hit, maybe would have went to 86. But, I mean, maybe I'm asking too much for such, because extra volatility means things are coming into gear and so on. So it came down towards that level. When you look at it again on the time frames that, again, I think the weekly and 3 day is where I wanted to see it. That to me is a hit of support. So coming in at a 61.8% down move brings us in at 74.0, 74 even. And then a 76.4 will come in at 70.1. We'll see continuing forward, but if we're going to resist within this, piercing above would be moving into the 18 average, but obviously right now it didn't. It hit this line going forward, and by resisting it, we'd be looking at test number 2 at 80. And one of the things to look for within Fibonacci analysis or levels of anything like this is when you go down to it the first time really quickly, like we did, and that you can see that we didn't spend really much time down here. For it closed on it on September the 3rd on a fast decline day, and then you pierce below it for 1 day, spend there, and then you exit to it and leave it quickly thereafter. So you spend 2 days below it, and really that was it. And going to and leaving it fast in each situation. So the first time you get there, it's a fast move down, it's a fast move up. So the next time you get there, one of the things to look for is you get there and it's lower volatile. So maybe congest within it, usually in spots like this, and well, maybe you'll resist at 82 and you'll support somewhere near 79 or 78 something. And you stay there for a little bit. That's one of the things also I think to look out for. And overall, this Fibonacci is majorly short term. When we take a look at this longer term, these lines are just going to crunch up together because we got bigger levels here with this high at 92.9 and this low at about 30. Or 93.4, I guess, is the number we got. So we'll just go 30, 32 and 934. So we have 76 for it, 7.25. Or 72. And that's a long, long, long ways away. We're talking about having like 15 and 9% corrections at this stage because from this low to this high, the price action hasn't really came down much at all. It's just hanging in there, barely hanging on like a thread right now within the 18 lows because it's already pierced below it. It's just staying within it. That's enough for this band to flatten out. That's really right now. And establish the support. So it's done pretty much two things. It's established support and it's flattened out this band. And in conclusion with the ratio, 16.5 and well, we'll call it 100 even. And we'll do some stuff on the spreadsheet. You have 100, we have 16.5. If we divide the two numbers, because that's what we do for Fibonacci, 100 divided by 16.5, we're going to get around 6. That's the differential of the move from that time frame. And Fibonacci is 0.618%. So what I do, I'm meant to push the equals button there, which, there we go. I'm going to take this number and I'm going to multiply it by 0.618%. And I can copy and paste, which will give me the 23.6 and all the lower ones below that. And then what I do is I equals 1, subtract the previous number, and copy and paste that below. And now to get my figures for Fibonacci this way, I can take equals this number, but because I'm gonna copy and paste, I want to put the dollar signs in before, and to the root of this number, and I multiply the low of what would be A2. So in this case, we'd have a Fibonacci level at 32.84, which was that key level that it came down to. So, I mean, it was only luck that it was around that number. So keep that in mind. Okay. So now let's just for fun, let's just take a look at the gold to silver ratio again and see how these Fibonacci numbers play out. And I haven't seen it because I'm just calculating this for the first time. And that top number was about 94. 93, 98 was the number. So I'll just go like this. And just to get it into where it is, I guess the easiest way would be this. So a pierce below, I mean, that's rare. I like to see that because it doesn't do it as often. And let's continue on further. Let's take a look at the next level, which that would come in at 90.45. And obviously no support there. Well, I suppose we'll go back to it and see what the hourly would look like in the shorter terms. But for now, we know it does what it's one of the many things it does when you're not supposed to find support, and that's go to the next level. But it looks like the next thing did the exact same thing again. 85 even is the next one. And find this one very interesting as well because a very oddity, big time actually. This is unusual to see how both the resistance and the support looks like this. However, it has resisted it, but still, uh, not. Maybe the numbers I'm going with are probably the wrong highs and lows. That is one thing I do think of here as well. And in thinking further over the last minute or two since I've paused the video, 16 and a half, eh? Really, 16? That doesn't seem to be how low it went. For silver was around $51 when gold was around 850, and that tells me that this should be about even 13. I don't know how much it's going to change these numbers. Six. Actually, yeah, it worked out. It does work out that way. I just pulled up a 100-year chart. And this number is around 15 at the low, and we even have a high in here in 1940, and well, it's 97. And here we got about the 100 number again. And in putting these Fibonacci levels in, well, they do paint an interesting story. For all these levels up here, they are short-term levels for what they are worth. And this represents 38.2% from the high to the low. And this represents 61.8%. So all these short-term levels below haven't been seen in quite some time, as the market has been exuberating the upper end of its resistance over pretty much its lifetime. In the early stages, it was low, high, spending just as much choppy time, having this little move in here in 1980. So in here, it was spending time in the middle parts, back to the low, back high, getting close to the middle in here, and breaking down below the middle, almost going to the lower part in 2011, and then back to the upper part as it goes. So I will just leave it at that. If these numbers are anything to you, just write them down because I will be deleting them. I most certainly don't want to keep it on this as I continue forward. But before doing that, let's take a look at those levels that I mentioned and how they looked on the hourly chart. And just take a little bit because that's what I wanted to do. So obviously not getting up to that level of resistance on this move higher. Failing to support this level, succeeding to resist it. And then after resisting, does it have a concise move to next? The answer is no, because, well, I guess yes, pierce above. And then, as I stated before, missing those levels and then not supporting this after it pretty much was in that area before because it was a pierce below. And then we've now since resisted this level and started to go lower. And we'll finish it off with a quick update on gold, which is congesting at that key Fibonacci point of 15 and a quarter as it resisted it for a while. And then it got above it, supported it for a while, and now we're resisting it and supporting the same level it did before it broke above it the last time. If it's going to go down, it hasn't filled really much empty space at all. If it's going to break support, well, the next major key level is 1321. Levels on the way there. Next one, where it came from, would be about 1420 up to about 14 and a half. And breaking out higher, of course, is 1670. And a completion, and with silver, we've mentioned, is it coming back to where it came from because we've had a break? Must hold is 1788 area and that range, and it's coming close to that range where you'd like to see it come down to. But yeah, the whole target level for what it's saying is that it's going to make a move up to 1823. Take care. Bye bye.